Welcome to September 5th, 2020, just watch list generation. Um, this will probably be a shorter session because of where the market is. We've we got zoomed in the market, right? We shot up and everything was just basically went parabolic. Well, we know parabolic climbs don't last, and we sold off the past few days. And there's a book called Who Moved My Cheese, and it talks about a rat that will keep going to the same spot. He's been trained to find his food and will eventually starve to death because he doesn't learn to check elsewhere for food. So what I want to tell you guys is the TPS method has been extremely generous to us, correct? From here to here, bar so you can see it better. So from here to here, we were just rocking and rolling. I was buying every dip. This dip's a little bit different. Okay, so the reason it's a little bit different is because of how we got here. I wanted to show you this. This is that Discord room that I'm in. Let's see. I don't know if you can see this, but let me jump to it. So can you guys read this right here? What I got highlighted? Oh, really? There's a good kids book version of it. I'll have to check that out. Let me write that down. Can you guys read what I have highlighted? What I told everybody here? It says D-Man. Here, I don't know how to zoom in, but it says, so on 9/2, so I know a lot of people are going to mainly cash, including myself. I wonder what that means. So, do you guys remember 9/2? So, my favorite chart. Here was 9/2 on AMD. This was the SPY. Look, 9/2. So I went to mainly cash here, right? Tesla, 9/2. Why do you think we were going to cash? Why do you think all of us were taking our money out of the market? Well, hindsight's 2020. Now you can see why. Guys, this was a classic parabolic move, right? And so what I mean by that is you can see slow and steady climbs, pullbacks, and then you just shoot up. And it was triggered by this, right? This went up. Look what Docu did. You see all the charts. You see the difference between healthy climbs and parabolic moves? Just make sure you take note of that, because you can't sustain these parabolic moves. You just run out of buyers, and then you get so many profit takers, including myself. So that's how we knew, hey, time to go to cash. Now we're at a point where we don't know if this pullback is anything big or not. Nobody does. But in the scheme of things, look, we're still holding the uptrend. We pulled back this amount, which is a lot, and it seems kind of crazy if you were trying to buy it here, but in the big scheme of things, we're just right back to where we were. Not a big deal. So what I'm going to tell you, just forewarning, with the TPS method, it has paid us well. I don't know what it's going to do next week. Honestly, I have no idea. If we begin to find buyers and they start to prop up the indices, then we should start to go back and continue this trend. If we break it and they're sellers, people are starting to get worried about the election, great. I personally, again, I'm not talking politics here. I don't think Trump's going to let that happen. I think Trump's going to throw out more money, more stimulus, whatever it takes to keep the market up, because that is what his reelection is dependent upon. All right, so with that said, let's get moving. What I do when when I think my cheese might move, is I start looking for other things to play. So I'm going to have TPS set up and ready to go if we find buyers, because there's a lot of great opportunities if we find buyers, right? If we don't, I'm going to have other plays ready to go because I don't want to just be sitting on the sidelines twiddling my thumbs. This was last week. So you guys have any questions about this? I think we were 100% last week again. But you had to take profits. And I hope you did. There we go. Sorry about that. Muted them. All right. So I'm looking at some catalyst plays, and one of them is AQST that I'm in. And so on the beginning of the watch list, I'm just putting in PDUFA dates and phase 3 dates. You can look at some of those charts, and what you want to see is basically, hey, are they being affected a lot by the market? And if they are, why get into them until we find footing, right? If they're not, hey, it's a chance to, when people do come back and buy, then maybe this will get a little pop. But AQST is on Kyle's watch list as well. This is their data, right? So this one I'm in. I think my cost basis on overall is around $7. So I'm playing that one. That's a one catalyst play I'm playing. A dividend strip. I think so, Dustin. I didn't play everything on the watch list, but I was 100%. And I went back and I looked at it. Let me see. I know all the TPS were 100%. I mean, we nailed those because everything fired long because of Zoom, right? Gold worked, Shop worked, Twitter worked, SLI worked, Intel worked, Logi worked. So a bio may not have worked because I didn't get in it. Yeah, no. So a bio, I'm not getting in this just because I told you guys, hey, CD PRs just aren't sticking anymore. If you want to get in it, go for it. But they'll probably PR in September, a bio. But I'm not getting in it. So that one's down. So if you're in it, it's down. All right. So UNH, have I explained to you guys? I know I did a training on it and recorded, but it was just stripping dividends. Do you guys understand? If you need an explanation of how to strip dividends, just type a 1 in the chat and I'll run through it. But what I'm looking for is to strip UNH. Dustin, you need it. Okay, so Dustin, to dividend strip, all that means is you're trying to catch a dividend. So I'll show you the stats on UNH here. So on ex-dividend date, that means ex-dividend date, what that means is you have to be a holder of shares on that date to get paid the dividend. So let's use UNH. They pay us $1.25 per share, right? So we've got 100 shares of UNH. You take 100, you multiply it by 1.25, your dividend, you will get a check deposited into your account through your broker for $125 if you own 100 shares on this date, which is September 11th, Friday. So that means you need to buy Thursday, at least. You buy earlier, but at least by Thursday. Now, the theoretical thing that happens to companies that pay dividends is their stock drops by the amount that they paid. So theoretically, if this stock is $100, then it's going to drop to 98.75. Okay, that's theoretically what happens. It never works that way, ever. So when you strip, what you're trying to do is capture the ones that don't work that way. So theoretically, the day of event should be down $1.25 because that's the day you're dropping. But look at the stats here. We run up 75% of the time. So it looks like to me that once UNH pays their dividend, a lot of people jump in to kind of catch the down move. So I think that dip will be bought up probably in pre-market. And it's saying we're going to be green on average about 1.4%. Okay. Now, what I do is I come through and I take out anomalies, like there's a 9%er here. So ultimately, I'm not looking for a 1.4% gain on this. I'm looking to get out about break even and just capture the dividend. So if I buy the shares at $100 and I can sell the shares at $100, well, I just made 1.25 per share. Now, the other thing that I do is I'll come in and I was looking at UNH. So let's just say UNH, we get them around 300. If I sell the 302 calls or even the 300 calls, if I sold those to give me more protection, well, then they're going to give you, I'm assuming you guys know what premium is. They're going to give you the premium. So you get an additional $13 here. So you'd be protected all the way down to $285 basically, with the premium and everything. Does that make sense? Any questions about that? So what I'm going to do is I'm going to look, and you can do this with any dividend. You just need to know the stats. I'm going to look to get in on the day before or 2 days before. Again, eliminating these, basically this was Corona, right? 13th of March. Eliminating that line, you're looking for about maybe a 1 to 2% drop. So if I can get a 1 or 2% drop on UNH, I'll probably get long and sell a call against it. And then what'll happen is on the day of, if we gap down, you're protected by that call. But if we gap up, that's fine. You're in the money because of the dividend and the call that you sold, the premium, and you just get that money for free. I do this when there's kind of cash sitting on the side, which there might be if I can't get into my bread and butter plays. Any questions on that? Ex-dividend date, you got to be in the day before. You can sell. So literally, if you wanted to, you could buy 1 minute before the close on Thursday and sell 1 minute after the open on Friday, and you would collect the dividend. All right. So that's a dividend strip that I'm looking to do. Yeah, it does, Wayne. And so everything adjusts with it, right? So the stock, the call, theoretically, everything adjusts. That's why what'll happen a lot of times is, let's just say, theoretically, this is at 320, and I buy shares at 320. But let's say I sell a 300 call. Well, most likely that call would get exercised so that person could collect the dividend because it adjusts. But if you're selling at the money, well, they don't want to take that risk. So if let's say we're buying this right now, let's say it was at 312 and we sold at 312.50, your credit, everything's going to adjust. Your shares adjust, the call adjusts, all of it adjusts, but it doesn't change the overall dollar value because everything is moving. So I hope that makes sense. You'll get adjusted via the call, via anything that the options get adjusted with it. But your credit, all of that, it's all going to be the same. So let's just, to make it big, let's say it was a $50 dividend and you sold a call at 300 and then your call goes to 250. You know what I mean? So that's kind of how it works, just to show the big difference. And ultimately what happens most of the time with me is we open up pretty close to where we close. And your call, the only time you actually need to hold your call is if it goes really, really high, which rarely happens. So I can usually sell the call, collect a little bit of premium out of the call, sell the shares back, about break even, maybe a little bit, maybe 15 to, depending on the 15 to $1 is what I try to capture depending on how expensive they are. And then you get a put. So my goal on dividend stripping is to capture that dividend, and I use that as insurance in case it goes against me. And then I use the call as insurance in case it goes against me. I'm not using that call to try to make money. If the call is simply insurance. Hope that makes sense. I do it all the time with certain stocks. Like another stock that does well for dividend stripping is, let me pull it up here. Market Chameleon. So I play this one a lot as well. Southern Company, they pay a 65-cent dividend. I believe the stock's like 50, 60 bucks. But look at, you can get this for a run into, play it through, and keep it after because it runs up. So Southern Company is a really reliable, buy 1,000 shares, get 650 bucks, keep it for a couple days, sell out for, about break even, and it's just free money, right? If you can sell it break even, because you're getting in for the dividend, getting out to put your money elsewhere because you don't want to hold that. All right, now let's jump to TPS. So somebody had brought up KNX, and let me put in Yeti as well. So somebody had brought in KNX. You're saying that it has 24% short flow. So this data is actually showing. No, the call doesn't expire on the ex-dividend date all the time. It's just, yeah, I'm glad you brought that up. So this one just happens to work that way because it's September 11th, right? Sometimes it's, Wednesday is the ex-dividend date, or Tuesday, and so the call will expire that Friday. So it doesn't always work that way. It just happens to work that way on this one because that's when their ex-dividend date is. And so what I'll do is, if the call has a few more days left to go, I'll just get out of it. And all you have to do to keep track of where you are, you keep track of your cost basis on your call, your cost basis on your shares. And ultimately what you're looking to do is you want your shares and your call, all of that cost basis, to basically equal a zero-sum game, meaning you're breaking even on all of it. That way you can sell it all and just capture the dividend. But usually what happens, honestly, is even when the shares go up, you can still capture a little bit of the call premium, maybe 10, 15 cents off of that. And so that's what you're doing. So I'm going to type that in. So your cost basis on stock plus sold call that covers it, right? And then you subtract what you're going to have to get back, and then you add your dividend plus the 125 dividend, and that's going to be your total profit. Ideally, what you want to have happen on this is to have, let's say you buy it at 300, you sell calls at 300, you get a whatever $5 premium on it. The stock goes to 5,000. Great, you captured the dividend, your calls, you got the premium for your calls. You're up. You'd be up $6.25 per share on that if that happened. If the shares drop to $3.85 and you sold everything, you would break even because the stock dropped $15 on the day of, which I've already explained. The chances of that are pretty slim. I hope that makes sense. If not, we can. I can give you some videos on it. All right. Let's throw in there pins as well. So I'm showing on Morningstar that we've got 30% as of August 14th on KNX, and so KNX So what I do, right, guys, I always come in and I look for, I think on costs, it's called nodes, right? I think you look for high volume nodes, low volume nodes to try to figure out, hey, where is everybody and where is everybody tracked underneath? So immediately on this, the thing that sticks out is here, right? So you've got all of these people here. I don't want to be trapped underneath these guys. If I'm trapped underneath these guys, I don't like that. I don't mind being underneath these guys. I'll take that. And so look, you see how we dipped? We dipped right into there and we bounced right off of there. So I don't know if whoever brought this up, if you were able to get in on Friday, that was a great entry because it's coming down right to this support. So this would be, for me, my stop out line, which you can see, what does it coordinate with? The lower Bollinger Band, right? Now, according to the rules per TPS, right, we can't even let it get down there. So playing this TPS, yeah, we're right on it. We're right on these. We get in. Let's say we stay here on Monday, we can try to. I'd love to see a flush at open on Monday and then just gangbuster throughout the week. I don't think that's going to happen. I think Trump's going to say something that'll probably give the market a little boost. Let me zoom in on this. So ultimately, really what I'm looking at here is more along these lines. Dustin, so TPS is stands for Trend Pattern Squeeze. Dustin, send me a personal message on Twitter, and I'll send you the criteria. The criteria for it. I've got a Word document that sets it up. It's just a play in the playbook, and it'll explain everything for you. And so what we're looking for, Dustin, is a TTM squeeze. And what that means is the Bollinger Bands and the Keltner Bands, that it explains it on there, but basically the deviations, Keltner keeps track of your average true range. The Bollinger is standard deviation. And so your two standard deviations has come within the 1.5 average true range, and that means it's squeezing. So you're consolidating, you're getting tighter. And you'll notice, you see how these Bollinger Bands are starting to come in and starting to squeeze? So on that 30-minute chart, it kind of gives me a better idea of where everyone is. So the way I would play this is, if you could get in on a 44.50, great, put in an order. That's like your fishing order, right? So fishing order 44.50. Support really is 45, basically, right here. Support 45. And then you've got your resistance starting to come in up here. 46. Now let's go back to the 195. All right, so a few things about this 195, right? Ideally, we want to see this Momo shift down here. We want to see yellow bars start to come in. You're seeing the volume starting to get picked up. So on all these, if you look at these down days, they're starting to get higher volume pickups. You see how the buy volumes are higher than the sell volumes? So you're starting to find buyers that are willing to take this at this price where we are. So yeah, I like this play because the risk reward is great. So I don't know whoever brought this up. The risk reward is great. So if you wanted to play it off of here, the other way you can play it is, we've got a trend setting up, right? And once this breaks this trend, you'll be able to buy the retest. By that point, you're going to have a Momo shift. You actually might have it shifting to the light blue at that point. So it depends upon your risk profile. If you're good at stopping out, great, go for it. If you're not good at stopping out, I wouldn't take it here. So you have to figure that out for yourself. All right, so Yeti, let's go through Yeti. So I think, Paul, you brought up Yeti. What I wanted to show you, Paul, is Yeti is following everyone else, right? So look at Yeti, look at Shop, look at TTV, Take Two. You see how all their charts are pretty similar. So what I'll tell you is, if Yeti is your favorite chart to try to play a bounce, then go for it. So for me, guess what I'm playing for a bounce? I mean, everybody that knows me knows what I'm playing for the bounce. I'm playing AMD for the bounce. And on last week, I was loading up on this week's puts. I was selling puts to get in AMD all the way down from 80. I think I got down to 73 and 74. I was getting like $1 something per share, which would give me a cost basis around 70. I actually bought AMD October 18th, $100 calls for I think it was $1.50. So this chart is very similar to Yeti, right? And so that's how I'm playing it. I'm playing this as a bounce. Yeah, exactly, Matt. Yeah, of course, right? Look at it. And so Yeti doesn't have the daily squeeze, Paul. AMD doesn't have the daily squeeze like Yeti does. So that's the quote unquote disadvantage. You can't count this as a TPS play. You're only playing it as a bounce play. So if it can hold, the buyers, everybody that bought here on this day, from here forward, right? Everybody's average is still here. So everybody is still in the green if they bought this day. If they bought this day, we're right at break even, right? So we're right on it. So Mitzi, the question on why to sell puts versus buy calls, do you know what theta is, Mitzi? So calls have a time value, right? So whose favor does theta work in? Theta works in the seller's favor, right? So I like being the seller. Now you notice I also bought calls though, right? I was selling this week's puts, but I was buying October's calls because I know the theta's not going to eat me as much as, so if I bought a call for, let's just say $85 and we dropped to 77 on Monday, that call's toast, right? The theta's going to eat me away. It's going to start decaying quickly. The other reason is because I am a long-term investor in AMD. I sold out. So I have a section of AMD. I have about 10,000 shares of AMD that I bought in the $10, $11 range that I don't touch. But I also have another 10,000 shares that I play on run-ups. Like I play these waves. I'll always buy and sell AMD. That 10,000 shares is about 2,000 right now because we were popping and my calls that I had sold, covered calls, are getting taken away. And I actually sold some shares on the 2nd, which was here. I was just unloading a lot of shares. So I've got about 2,000 of my core position. So I need to capture another 8,000 shares. So I'm selling up here at 95. So if I can put those shares that I sold at 75 to 80, well, that's a $15 profit that I just took on those shares. So I don't mind being put the shares that I'm selling naked puts on. I'd actually love it. I'd love to get put the shares. And so the theta is working in my favor, and I want to get put to shares. Yeah, so you have this butterfly, right? It's the same one that I've got in here. Is it the $100 October one? So you have a vertical put spread and a long call butterfly for the 100 strike. Yeah, that's this 100 call butterfly in October. I think this is the same one that you have, if I'm not mistaken. So that's what I'm playing for a market bounce. And if it bounces, great. I get that premium for free. If it doesn't, I'll get stuck to those shares, and I want them anyway. All right, so I'm going to keep Yeti on here as a possible TTM play, just so I can look at it a little bit later. All right, let's jump to pins. Somebody, I think I'm not mentioned pins. Oh yeah, this is nice. So what we see, of course, everybody can see this bird pattern, right? This looks like a character from the Angry Birds, right? That big fat one. It's got a little beak right here. So Mitzi, what happens when the VIX gets high is uncertainty enters the market, implied moves, implied volatility get bigger. We don't know what's going to happen. And so that's why I was able to get such good premium on AMD. Like, who in their right mind is selling puts? So I'm selling $75 puts when AMD is at 76, and we're just crashing down. I'm like, hey, I'll take that. And I'm getting like $1.50, $2 for these puts because of the risk involved in selling them, because we're just crashing. We've literally gone 94 to, we've dropped 20% in 3 days. So everybody's scared, and the VIX is going up. So anytime that you get movement either way, Mitzi, it increases. That's why you sell calls on pops and buy puts on drops. So I'm selling calls on these moves. This entire way up, I'm selling calls because I'm getting good premium for them. Now I'm going to get good premium for buying the dip. All right, so pins. What I see, I'm going to blow this up so I can see it a little bit better. What I see on pins is we've retraced right to support, right? So for me and not, if we get under this line, I wouldn't. If we get under and stay under, I'd be out. I know there's support here, but what you're telling me is if we're hitting this, you could play this for a bounce and try to catch the reclaim to get in here. That would be a possible play. Yeah. Okay. Yeah. That would be mine as well, because I don't want to be trapped under all these people. So if we get under here and start consolidating under, any time we pop back up, you're going to get pressure from these sellers. So you could play it for a bounce, but that would be it. So ideally, what you would like to see happen here, Anand, is reclaim this anchor VWAP, and you should start testing this resistance, right? So if you reclaim that, you should start to consolidate little lines in between here to get some legs to break up, and then you'll probably pop to about here in this range and do the same thing. Yeah, exactly. Yeah, that's I'm gonna look at that one a little bit later as well. I like the. There's gonna be a lot of. That's the thing, guys. There's gonna be a lot of good risk reward plays here, because of where we are in the market. So here, let's run through my master watch list, and let's just see if there's any good plays. I don't think there's going to be because of where we are. So McDonald's is actually one that I actually liked. Yeah. So I get I'm doing a short put on this. All right. So where is McDonald's squeezing? It's squeezing on the 195. So it's just starting to squeeze on the 190. I like the 130 a little bit better. So yeah, I'm just looking for any symmetry points or let's see on this big pullback. Yeah, everything's kind of pointing to if we don't bounce from here that we're going to start. We might come down to here. See how it's kind of symmetry is coming in here. So if we follow this pattern, we might get down to here. So the way I'm going to play this is do they, Paul? You know, and that's the thing. That's why I told you, like, for the last pullbacks, I've been buying up the last pullbacks like crazy. I don't know with this one. Honestly, I honestly don't know. And that's why I'm telling you this week there's not going to be a lot on the watch list. I just don't know. I don't feel comfortable putting in until I see Tuesday. And that's why I would rather do daily watch lists, kind of give you a weekly watch list of what I'm looking at, but also kind of put in daily watch lists to say, hey, here's what I'm looking for now. So let's just see where everyone is here. So, you know, if you wanted to do longer dated, I don't see a lot of opportunity except for trying to play this bounce. If we can hold this level, then maybe put on a vertical put spread. Is that in the same general area? Because a lot of people use that. So yeah, it's right on it, isn't it? Yep. Yeah, so what I meant in the same general area, Paul, is you see how the 34 is right down here in this where I've got circled? So what I meant by that was, is the 34 close to where I think that you're ultimately going to get a bounce? And it is. It's running right into it. You know, so yeah. You know, this one, if we get a bounce, great. I may take this one just as a shot to play as a quick recovery. But I think this is going to be the same with all the TPS setups. Yeah, well, you'll notice as you start getting into trading that everything lines up, right? So the 34 is much more of, it's not the 20, it's not the 8, right? You're looking for, it's more of like, kind of like the 50 simple moving average, right? You're looking more of, all right, where are we, now that we've popped, where's a good bounce spot? And you can see, here we are, we've rode the momentum. Now, and you can see that McDonald's bounced here, right, off the 34. So once we broke above, if we're going to continue this trend, we should see a bounce here. All right. Shaq still squeezing. So just so you know, I'm a long-term investor in Shaq. I love Shaq. I don't know if you guys have ever had it. It's great. I love it. It's a little overpriced, but hey, as an investor, make your money. So your Shaq squeezes are on the lower time frames, which I kind of like because I can get it. I actually like this one because you've got a good defined level here. And so the 2 hour or the 78, Yeah, I'm going to put this one at the top of my watch list here. So Shaq 78 2 hour. The reason I like this, guys, is you see the Momo shifting. Shaq's held up pretty well, considering we just fired, and all we're doing now is we're back testing. So if we back test and hold this level, great, let's go. If we break this, we're probably going to come back and back test this 63 level, right? Because this is quote unquote where the cup and handle should have formed right here, bam, and pulled, but it just blasted through. So we'll probably come back and test that. So I'll give this one a shot and see if we can hold. But just know that if this level breaks, see how this one's riding that 34, Paul? Boom, 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 boom. So if this level breaks, which is going to be that 34, you're probably going to come down here. So Shaq 78 and 2 hour. That's going to be, so far, that's my top TPS play. Yeti, we already went over. It's gonna do what the market does, because you can see it's doing exactly what everything else does. Now, Kirkland Lake Gold, guys. If you want to get in a gold play, right? So I think last week I mentioned gold. Gold is squeezing too. So you've got a couple of plays. If you want to get in a gold play to kind of hedge against the market falling down, hedge against when Trump says, hey, we're going to print a gazillion more dollars. These are ideas that you can get into. So KL/gold, TTM squeeze plays with gold. All right. Now, TSM, Anant, are you still in here, buddy? TSM, I love TSM, the company. They manufacture, wafers for AMD. I love this chart, man. I just love it. Like, if the market wasn't pulling, I would have been in this a couple days ago. I'm waiting on Tuesday, but this one is probably my favorite chart, squeeze chart. So I'm going to put that one at the top of the list here. Daily. Now, what I need to do, right, is I got to go in and I got to figure out, there's a few things that I want to look at. First off, where's the average? Everybody that bought the breakout, where are they, right? So that's your anchor VWAP. So that's where the average is for them. If you didn't buy till here, you're there, you're just slightly above them. And if you're buying dips, all right. Okay, so now I see where people are. Let's go zoom in and find out where everyone is sitting. So all I'm doing here, guys, is what you're basically trying to figure out is what is everyone else's cost basis? When are they hurting? When are they going to sell? And when are they going to buy? So I'm going to put in some levels here that I want to kind of zoom in on. And Anand, did you get in around 78? Was that your entry? Let's see. Small size for bounce off low October spot. Near lower Bollinger Band 48. Oh, you bought it off of Anchor VWAP. So you bought it off of about 80, 79, 80 bucks, somewhere in there. Yeah, that 78 was the low. So that's perfect pickup. So let's go back to the daily. So what I'm going to do on this, again, guys, keep in mind, 79. Yeah, I think that's 79.08, somewhere in there. Keep in mind, all this is dependent upon the market on Tuesday, right? I think we're going to get some buyers. It may take till Wednesday, but I don't know. If we do, these will start working extremely well. So dip buy off of 78 range, more aggressive by 80 range. And so for me, I would do what Anant is doing as well, is October monthlies. Now, that's to play the longer term chart. If we're getting buying pressure, like let's just say we gap up. Let's say we gap up on Tuesday and we're up a few hundred points. What I would do is I would wait for a gap closure and buy that gap close because it's good risk reward, and see if we could bounce off that gap close. Let the people take the profits, and then bam, gap close. All right, and if that happens on that gap close, I could take a weekly call because you know it's going to work quickly, right? You know it's going to work that day. So the longest I'll be holding that weekly call, if it didn't work, would be that day. If it worked, I may try to squeeze it out to the next day. All right, so that's that one. Now DKNG, I'm in DKNG. I love Michael Jordan. Kind of an emotional trade for me, so take it if you want it. But DKNG squeezing on the 130, starting to squeeze. You know, is this going to be the Chicago Bulls or is this going to be the Charlotte Bobcats? What Michael Jordan does, right? Or is it going to be Nike? You know, anything Michael Jordan touches, it turns to gold. Even though the Charlotte Bobcats are losing, they're worth billions of dollars. So that's all Michael cares about right now. Net. Woo! Wow. Yeah, that's ugly right there. Don't touch that. Match, same thing. I wouldn't touch it yet. I think Wix, yeah, all these are wait and see. So if you wanted to take a shot on any of these like Yeti, these are the ones that look just like Yeti. So Docu, I'm actually going to take a shot on Docu. I'm in it right now because of the way I play earnings plays. 205 was my range. I thought getting in around 210 to 205 was a good idea. So that's where I am, between 210 and 205. The earnings were good. It wasn't blowout like Zoom's, right? But they were good. So it's in a little 15-minute squeeze. I'm going to try to play it for a bounce next week. I may buy lotto calls on this one. I probably will. Put that in there. If there's a buying appetite, right? A risk on appetite. I'm going to put that under Shaq though. So Docu, I'm long from 205 to 10 range, and might do lotto style call. You know, Dix. So Chris, Dix is wait, let me actually I think I can just look on here. So their dividend is the 10th. So just know Dix where is their dividend? There it is, yeah. So just know Dix dividend, Chris, is the 10th, right? So just know you're playing through a dividend, and if you're comfortable with that, great. If you want to see the stats for how DIX performs around dividends, it's not giving me my side column here. There we go. Yeah, not yeah, exactly. So you can take shots next week. You just have to be quick to stop out. So Chris, so look, you see the day of move on DIX. You see how it gaps down 25% of the time. So just know on the 10th, you're probably going to get a gap down. Now, if you want to play the run after, 2 weeks after, you're up 58% of the time. So you can try to do that. If DIX stays in that squeeze, we start to see some buying. The day of, which would be the 10th, that might be a good time to get in. Or if you wanted to, you could wait for this 2 days out, right, where it's down 30 or it's down 67% of the time and get in, on that day when it drops. Basically, take these two top ones out, you're going to get maybe about 1.5% move, and try to get in on that second day about 1.5% lower. Does that make sense, Chris, what I'm doing with this? So I'm just using historical data from the dividend, which is going to pay on the 10th. It's not, I don't like to run into, so I'm not going to get it beforehand. If anything, I would look at DIX. I'm actually going to write that down. Look at DIX after div of the 10th. I'll see what the chart's doing then and see if it's got a TPS pattern setting up and a bottoming pattern getting around. All right, so I think we're done with the TPS plays. I mean, there's just Paydex isn't that bad, actually. I'm actually going to put this one in. I'm gonna dig into it a little bit more. I want to keep this. We've got about 10 more minutes. So yeah, that's it about the TPS plays. I wanted to go through some earnings plays real quick. Now, does everyone in here know how to read this data? I went over it on Friday with the training, and I posted the YouTube video on the link to understand how to read this data. I hope you do. Does anyone see anything that they want to play? Here, let me expand it if you can't see it. Does anyone see anything on here that they want to play? So basically, we've got September 8th, right? That's Monday. Anyone see anything at all? The things that I'm looking at, you see work? Yeah, Peter, exactly. I'm definitely looking at Adobe. So Adobe, work. Now, because I knew this data beforehand, right? I was prepared. I knew the data beforehand. I knew what works started to do. I was looking for a point to short works, and that happened again. I don't think I shorted on the second. I think I shorted it the next day, but I'm already out. I covered. I just did equities. I was just shorting the equity. Now, I'm still looking to play this. Keep in mind, works only has 4 sample size. What that means is the data isn't as reliable as Adobe because Paul, it's just it's literally a tool that was created I'm trying to get it. It's just a tool. I called it MC Scraper. I paid somebody to scrape it. So I'm not smart enough to code that stuff. So somebody goes in and they just scrape the data. And Paul, what I'm looking for him to do, I was talking to Efron about this. I'm going to get him to scrape all the data, this data here. So I'm going to create a scraper that scrapes more than what I have, because of right now, the only thing that they scrape is this. Literally all I do is I create an Excel sheet with the symbols. I send it to that. Where is your lesson from yesterday posted? I know it's on Twitter. Let me find it. Sorry if I was kind of out of it. Efron said I seemed kind of out of it when I was doing the training. All this information's still there, but I was trying to help kids in school and all that stuff. But that's the oh wait, that's not it. Sorry, that's wrong. Let me go to that. Is a quick 7-minute video you can watch, but the training one is, yeah, Anant got it. Thank you, Anant. That's the training one. All right, so what? The grading video, was it great? Yeah, somebody posted. So what I got to start doing, Paul, is I'm going to start creating the videos on my other screen instead of this humongous 65-minute screen, so you can see it. Yeah, I just forget. So, all right. So quickly with earnings plays. Oh, you were being sincere. I thought you were joking. Yeah, no problem, man. No problem. But yeah, one of them was grainy. One of them commented on YouTube or somewhere and said, "Why don't you put this on a smaller video? I mean, a smaller screen." I'm like, yeah, that'd be smart. All right. So ER plays. Oh wait, I've already got Adobe in here. So whoever said Adobe, you nailed it, right? So yeah, I am definitely looking at Adobe. If we get any kind of a bounce in the market, I think Adobe's going to go gangbusters. So yeah, and just realize playing through, you're taking 50-50 shots, right? And then after, it kind of fades away. So there's multiple plays here on Adobe that we're looking at. For one, we're looking at the run-up, and then we can also play the fade-off, but we got to wait till that happens. But also, guys, look at GWRE, right? When were their earnings? Whoops. So their earnings, yeah, Lulu's one of them for sure. I'm going to be playing as well. Let me get to that. So GWRE has a pattern of, hey, we can sell vertical call spreads against this. And you look at the chart, now always pull up the earnings report. Now, September 2nd, we missed our opportunity. We should have done it here, right? We're already down. So that one's out. It worked. We didn't time it. It wasn't on my radar. I didn't see it. All right, so September 3rd. No. All right, so playing after, I'm out. So the after plays are out. That's one of my 4, right? It's out. So let's go to the day ofs, which would be, we're really looking at this week here. Let me feel these. So we're looking for days. Okay, so GME, we already did GME. I'm out of GME. Just so you know, GME is definitely a day of play. So you can look. You know what? I might short shares through this. The problem with GME is there's a high short flow and you can get squeezed. Uh, but if you want to play GME just for fun, buy one share, short one share, uh, the stats are great. 25% earnings move, which means 75% of the time it's negative. 17% opening gap, right? Gap's down all the time. But the problem is after that, it can run. And what that means is everybody buys it up, takes profits, gets shorted, shorts get squeezed, and then we pop. Okay, so that's GME that I'm looking at. Work, I am going to play work through most likely. Because of this, I will sell vertical call spreads. And again, guys, if anytime you want me to come in and look for option strategies, or you can do this yourself if you have a subscription, go 3 days before, 2 days before, 1 day before, and look for the win rates. And you can see, remember, we only have 4 sample size, so 4 is as high as you're going to get. 100% win rate shorting the 25 delta call, or you can do the credit call spread, sell the 25 delta call, long the 15 delta call. Okay, so I'm going to be doing one of those plays most likely. Not most likely, I am. I'm going to play this through. Lulu. So Lulu has an opening gap. Anant, what's your idea for the day of? What's your play? What did you come up with? While we're waiting on that, I'm going to jump to Cassie. I'm going to look to play Cassie. If we any kind of pop on Monday that we get, I'm going to be using Cassie as a hedge. So I'm going to short it. So if the market goes down, I'll be short Cassie, and it statistically goes down 1 day before. So on Tuesday, if there's a pop and Cassie gets a pop, I'm going to be shorting, looking for this 25% sell-off before opening on Cassie. Let's see. And then Adobe, and then FedEx, guys, what I'm doing with FedEx, you can see that it kind of has a little run into, right? So what I've done, do you guys know what an iron condor is? Or a iron butterfly. So an iron butterfly is the same thing as an iron condor, except the middle points are the same. So like on an iron butterfly, I would short a put and short a call at the same strike. So what I try to do is I try to put on two heads of the iron condor. On this dip, I sold vertical put spreads here. And on the pot, I sold vertical call spreads. Now, I'm willing to take these vertical call spreads off for paper cuts, losing, $500-600, because I can put them on higher. So what I've done here right now is I'm looking to hold these through, and I'm risking 12.8K to make, I'm risking 7.2 thousand to make 12.8 thousand on this. So that's my play on the FedEx. And if we get higher, if we start getting above this, I will be taking these call spreads off and putting them higher. All right, so that's FedEx and Adobe. I'm just looking to play this run up. I'm going to be buying calls to take off before earnings. I don't want to hold them into it. I also will be looking to sell vertical put spreads, possibly to hold through, because what is Adobe's price right now? So we look at Adobe's price right now. It's at $41.94. We switch over here to our sheet that we keep track of everything. right? So Adobe is here. What is Adobe's implied move? I didn't put it in. I thought I put it in. So Adobe. So Adobe's implied move is 8.8. I don't know what that is. So 8.8. And the price of Adobe right now is $491.44. So if we start getting a little floor and the market's not selling off like it was, the earnings play is saying 450. So let's look at Adobe and see actually what they've done. So 8.8%. Does anybody see any red that is higher than 8.8%? In the history of Adobe, has it ever gone down 8.8%? No. Okay, I see no plan for Lulu. Sorry, I missed your Excel. Just went to market familiar with that. Negative drift. It's just 58%. Yeah, okay. Yeah, so no, so in the history of Adobe, we have never gapped down 8.8%, right? So what that tells me is, all right, I think we're safe to the downside. Now, to the upside, we've gapped up, right? We've gapped up pretty high. This was the higher gap down, but it was only 7.3%. So what I will be looking to do, there's two ways to do this, guys. I am a long-term investor in Adobe. I think I only have, honestly, like 600 shares. So I don't mind getting up to 1,000 shares, right? So I may sell 1 to 2 calls around this, puts naked around this level. But for sure, I'm going to do a vertical put spread if we find a base in the market, right? If there's not to just continue selling. Because look how well this aligns. See that 450? Well, where do we find support? We're going to start finding it around 460 all the way down. And if I take these candles away, where is the biggest volume bar for support? Where does it start? Right there, 450. So I'm willing to take Adobe at 450. In fact, when Adobe on the earnings day, let's say tomorrow was the earnings day, I would put in an order to long shares at this point, just in case we got a quick flush to pop up. All right, so that's Adobe. Now let me jump to Lulu and you said Chewy. So, all right, so let me take this off so I can see. So Lulu, Anant, are you going to try to, you could try it, not to try to get a, you know what, I might do that with Lulu. I might try to capture. So for me, guys, 100 shares is pretty small. I don't know what your account size is, and if you want to play things like buy 1 share, buy 10 shares, because on these earnings moves, you get $20 moves. And so it's kind of fun to kind of get the feel of them with 1 share. Like I used to do this literally with 1 share till I got the hang of it. But for Lulu, I might, if Lulu keeps dropping, let's say on the 8th we keep dropping, I might buy some shares. If I can get some shares around 468, 470, I might do that. I might play it for the opening gap. Just a 75% opening gap, and I'll put in a good till cancel order to sell based off of the data up here on Lulu. So that's let me put that down. So Lulu gap up. Oh, or let's just put opening gap play. Small shares. Do not do this with contracts because the IV crush will kill you. Somebody told me they were playing the gap on in the run after on. Oh, do you? You still pay commissions. Well, I will tell you this, owner. This may tell you how old I am and how long I've been playing the stock market, but I started a brokerage service with a company called Daytech, and they advertised. I think it was either $19.99 or $15.99. That was commission to get in and out, and I was all about it. So I was paying $40 to get in and out. So what I'll tell you is, I would rather always pay commissions till I've proven myself profitable on a strategy, because you mess up one trade, you're going to lose that amount of money anyway. Commissions are kind of like the cost of doing business. I own Subways, I own Sport Clips. It's kind of like thieves. You're going to get stolen from. People are going to take a piece of turkey off and eat it. People are going to give food to their friends. It's a cost of doing business. You want to make it as minimal as possible, but you don't want it to have you from going out there and taking shots and learning a new strategy. So that's my soapbox on that. So yeah. So Anand, if you're doing the day of, right? So what we would do is we'd come over here and we want to look for some high range plays. So like what columns, Lulu? 79? So yeah, so let's say, so what Anand's talking about is day trading. This gives you the data for day trading, and it's one of my favorite plays because it's the safest. So let's say Lulu, let's say this Lulu opens at 350. Yeah, and I'll definitely be playing Lulu the day of. I will absolutely be playing it the day of. I'll be playing a lot of these the day of. Chewy too. Yeah, it's got some range as well. So look at AEO. Stitch picks as well. So those, absolutely, I'll be playing these day of. So for those that don't understand day of, all you do, this is the data that's telling you how much it moves on average. And you simply put in the opening price. So let's say Chewy opens at $30. On average, this is the range. So you should long around 28.50. You should short around 32. And all you do, again, it's in that training. You come in here and you find applicable points on technical analysis to find that will be support and resistance, and you match up the lines. That's it. That's all it is. All right, guys. I think that's it. I think we're good. Any questions or anything else you guys want to go over? I'm going to be playing Nike as well. I'm setting up for this after. You see this? So Nike is usually bought up on dips on earnings. Usually what happens on earnings, for whatever reason with Nike, it kind of dips, and then people buy it up. And so you see how it's 33%. I'm going to be setting this up. I'm going to be trying to play this 2 times for this move and for this move on Nike. So just have that one in the back of your head. I do both, owner. I do both. It depends on how versed you are with options. And if you're not, you should just do it with shares. But when you're day trading options, you need to day trade short-term options. So for example, let me show you. I don't know if you could see this up top, this options chain, but zoom in on it. Let's see. So when you start going further out, you start getting bigger spreads. So do you see how this one's got 239 by 276? You can't really day trade those options. So you want to find options like Lulu that have very little spread in them. These still have too much spread. You need to find them. So they're normally not like this. I think it's just because the market flows. Like AMD usually has a 1 to 2 cent spread on their options. So you just got to be careful not to lose what's called slippage, not to lose your profits through slippage. Yes, exactly. So a lot of times when we're the sellers, right? So if you come in, like for Docu is a perfect example. So when Docu was dipping, I not only bought shares because I think it's going up. What else did I do? I'm selling puts around 200 that expire that day. Because if it goes to 200 and I get assigned them, great, I was going to buy them anyway. If not, I just get the free premium. All right, guys. Man, an hour and 15. I got to cut that last 15 minutes off. I'm trying to keep these to an hour. I'm going to stop the recording.